Hello and welcome to Car Dealer Live. My name is James Batchelor and today we are talking about Marshall Motor Group's interim results for the first half of this year. The main headline is a record underlying profit before tax at £38.4 million, up 426.6%. from an £11.8 million loss during the same period last year. A strong market has seen Marshall perform exceptionally well, but could there be some tough times ahead? Joining me to discuss more is Chief Executive Daksh Gupta. Good morning, Dash.
Morning, James. Good to see you and thanks for having me on the show.
Absolute pleasure. Always good to have you on the show, Dash. Firstly, congratulations. Now, I just gave one figure there. I mean, what are the key points for you from these results?
Well, I think before I go into our numbers, I think I have to frame our numbers with some context. And that is basically, we, along with the whole industry, have benefited from some quite extraordinary market dynamics. And in particular, that's in the used car market. I mean, quite frankly, you know, if people are sat there looking at their numbers and thinking they've suddenly turned into the god of automotive retail, they really need to have a bit of a reality check. Now, that said, you know, we've benefited from those tailwinds, but you know what? I want to give absolute credit for the market outperformance our teams have done, and they have absolutely smashed it out the park. And I will say internally, we can't control the market. What we can do is control how we perform against that. And if I look at our numbers, and I just wanted to sort of frame that because our numbers are quite frankly phenomenal, and they are phenomenal. So let's just have a look at that. So first of all, reported revenue at 1.133 billion. Now that's up 49% on last year. Now, of course, last year was affected by the pandemic and our operations were closed. So that's understandable why we had softer comparisons last year. But let's not forget that actually this year we were closed from the 4th of January through till the 12th of April. So bizarrely, it was the longest period. So I think it reflects on how we've adapted our business. But I think a more interesting reference point is actually our revenue in the first half was up actually 13% on 2019. So that's probably a good barometer. So still a massive double-digit outperformance, so stunning. Our gross profit was up 11.8%, which was a record for us as well. That obviously is in the back of that strong used car dynamic, which I'm sure I'll be surprised if you don't ask me about that a little bit later. Okay. And then, as you say, our underlying profit before tax was 38.4 million. We reported profit before tax at 39.5 million. And just to sort of put that into context, that's against a previous record of 16.2 million. So just think about that for a second. Our previous record was 16.2, and here we are today posting reported revenue, reported profit of 39.5 million. It's phenomenal. But that's, as I said, exceptional market dynamics, exceptional market conditions. And I think if the other things I'd say in terms of highlights on our numbers, we're in a position where we have a net cash position of around £60 million. And remember, we've got no debt, we've got no pension deficits, you know, so we're in a fantastic position there. And our net assets are now 239 million. We've just announced a dividend. We restored dividends at a payment of 8.86 pence per share. So that's a phenomenally strong dividend. And I'm sure people will sit there and get their calculators out and work out what that is as a yield. And I think the other thing I would say is, you know, we were able to pay dividends because clearly we've had no furlough benefits, because I was really proud. Probably one of the proudest things I've done in my career was to say that we were going to pay back the government their £4 million of retail support in terms of furlough and retail grants. And also we did pay all of our colleagues, with the exception of directors, a thank you bonus and backdated pay reviews. And that was around £2 million. So actually, if you look at that, the 38.4 underlying is, you know, clearly significantly better than that, really. And I think just in terms of operational metrics, our like-for-like new unit sales were up 46.1%. That was 7% ahead of the market there. And used was stellar, absolutely stellar. I mean, we had to use Auto Trader used car proxy data, which showed the market was up 31%. Interestingly, SMMT have just released theirs this morning, and it shows that was up 33%. But we were up 51.7%, nearly 20% ahead of the market. So across the board, phenomenal outperformance. So that big respect and credit to our teams. That absolutely massive pats on the back to the team there, and that they've got to take all the credit for. We can't take the credit for the market dynamics, but the outperformance down to them. They're absolute heroes because they have smashed it out the park, quite frankly.
Yeah, yeah, and I'm glad you mentioned the payout to employees and handing back the government furlough cash, because really I think you guys have been seen as a shining example of what the motor trade can do, because there are plenty of other dealer groups out there who have ridden the good times, such as yourselves, but they haven't also handed back. So just explain to us a little bit more about the decisions, those key decisions, and the reasons why you took them.
Yeah, I mean, look, from our perspective, I'm really proud of the culture we have in the organization. We've been Great Place to Work status 11 years in a row. We've been ranked UK best workplaces for 7 years in a row. And I think culture starts with the top of the organization and the board. And I think as a board, if we look at our focus on ESG, we've got a real focus on environmental matters, and Richard, our CFO, is doing some fantastic work there. We've got some real momentum started there. We've got real focus on the social aspects of our responsibility as an organisation, and on good governance. And for me, a bit like last year, we actually in fact, we exceeded our original expectations, but we didn't take a bonus because, from our perspective, you're kidding yourself. You didn't really make that money because it was supported by government support.
Yeah.
So I could have taken a bonus, and having just moved house, it would have been very, very helpful. But we didn't, because we didn't think it was morally right. Now, that's our perspective. We respect other people's views. That's just our perspective, okay? Likewise, when we have all benefited from the government support, and we're all benefiting from these exceptional tailwinds, and everybody is going to have a phenomenal year this year because of these market dynamics, okay? As I said, it is unusual, and none of us have ever seen anything like this, but we looked at ourselves in the mirror and said, if you've made this money, okay, do the right thing. Now, that's our perspective. We respect other people's views, okay? That was the decision behind it, and I'm so proud that we did that.
No, it's fantastic to hear. I just need to talk to you a little bit about used cars, because you spoke at length about it just a minute ago. I suppose this question's a bit like, how long is a piece of string? But how long do you think this used car boom is going to be? Because I feel as though people such as yourselves and I have been talking about this for a long time now, but customers are just starting to realise how strong the used market is. So, I mean, do you think we're going to be seeing this for the rest of the year, do you think?
It's really hard to call, James, because the challenge is obviously starting or as a result of what's happening in new cars. And, I always say that a used car doesn't start its life until it's a new car. That's where it starts. And ultimately, this is something that's influenced by the OEMs. And again, I don't think people fully appreciate the focus on used cars that the OEMs are doing. And I've got to give them credit. They're doing a massively positive job of trying to drive and retain customers into their networks with products such as PCP, service plans, connected car. So everything that is impacting the used car market starts at new. And the issue there is clearly the shortage of semiconductor chips, so semiconductors shortages. And again, a couple of interesting stats I heard, or an interesting stat that I heard recently was the entire global automotive industry buys 67 billion semiconductor chips. Now, I've got to be honest, until I heard semiconductor chips, I didn't even know what a semiconductor chip was, so I can admit that. And I didn't even realize that, I mean, like somebody said to me the other day, if you take something like a Range Rover, which has phenomenal tech, it can have like 1,200 chips in, which is amazing. I didn't know that. So if you think the global automotive industry buys 67 billion chips, Apple buy 81 billion on their own. And of course, what's driven this dynamic is the fact that everyone was sat at home, locked down, buying PlayStations and Xboxes and, consumer electronics. And of course, OEMs shut their factories down. So of course, the tier one, tier two suppliers diverted those chips. That's now led to these shortages in terms of semiconductor supply for OEMs. Now, I don't think, because we all started to hear of these chip shortages in January, really. But you know what? I kept reading about this, thinking, we haven't seen supply shortages in the UK. And I kept on hearing about this around the world, thinking, I don't know what people are talking about, because we didn't experience any shortages at all. And I think you've seen that in our first half numbers, and indeed the SMMT numbers in the first half. But I think a point that's really important to note is that's because OEMs stockpiled in November and December in anticipation that there could be a no-deal Brexit. So I don't think we really felt it because of that stockpiling, because of the Brexit dynamic. That's then flowed through to used cars. And of course, again, interesting stats. If you look at April to August 2019, your car had a normal depreciation rate of around 9.6%. What's happened this year over the same period is cars have gone up over 17%. So it's a delta of 27%. It's insane. So if you, just to put that bit more color on that, if you owned a £20,000 car in 2019, it would have depreciated by around £2,000. This year, it's gone up by £3,500. So that's a £5,500 delta. So when's this all going to end? It all comes down to a crystal ball. And you reminded me of one of my non-execs on our board, because I get asked that question, when's this all going to unwind? And I feel I was asked this question with analysts yesterday and this morning, and I don't think anybody really knows. I think to be fair to the UK OE national sales companies, I think they don't necessarily know themselves, because they're having to deal with the factories, and the factories are making very complex decisions around production allocation. So it's not easy to call. My view is I think this is going to be here well into 2022, and I'm hearing, one of the things I've started to do since this has broken out is I'm listening to what the global OEMs are saying, and some of them are now saying this could even be here till 2023. So who knows?
Are you sort of putting plans into place to having to let customers down in terms of new car order, or possibly even having to change their new car orders? Because, like you were saying, with for instance, a Range Rover, if a customer can't order a head-up display because of the semiconductor issue, are you going to have to tell these customers, I'm sorry, if you're going to want, if you want that car, you're going to have to shortage, you're going to have to sort of sacrifice on spec?
Yeah, and that's exactly what we're having to do, James. I mean, it's really interesting as a customer myself. One of the things I've committed to do is to have an electric vehicle as part of our ESG strategy, which I was so looking forward to. So I had an Audi e-tron GTRS, my first ever electric car. I was so looking forward to it. The charging kit's been installed at my house. I was really looking forward to it. It's supposed to be in here in July, then it's been pushed back, then August and September, then October, and now I just don't know. So it's quite interesting to sort of go through that as a customer. So it is challenging, and I think our teams are doing a phenomenal job of trying to manage that, as are indeed our UK national sales company partners. But customers are understanding it, and I think this is not a case of OEMs are being difficult or we're being difficult. I think customers do understand this is as a result of the pandemic. But you're right, we are having to manage that quite carefully in terms of communication and manage expectations, and that's what's forcing customers to buy used cars, of course.
Yeah, and I know new car prices, they go up incrementally every single year, but do you think manufacturers are thinking about putting big price rises on new cars just to try and help with this supply problem?
Actually, what's been interesting, James? I'm surprised we haven't seen that yet. I mean, with the exception of one group of brands, which I'm not going to name, and that was only a marginal increase, quite frankly. I mean, like 1%, so nothing material. I am surprised we haven't seen bigger increases come through on new cars. My only guess as to why that is because clearly OEMs want to make sure that they protect residual values and don't impact customers in terms of pricing. But also they've got to keep these vehicles moving as well. Whilst the supply is short, they still have to keep the existing factories going. And I think the other interesting thing on this particular point around pricing is, you have got a benefit that we've seen this year in terms of currency. So, sterling is now pretty much at 1.18 euros. So I think the manufacturers have got some cushion there as a result of that currency. So, we'll wait and see what happens for the remainder of the year and into next year.
I know this may be a bit of an extreme question to ask, but it seems though these problems are going to be lasting for a long time. You mentioned one manufacturer thinking 2023. Does that have an impact on your plans in terms of growth? I mean, are you having conversations about, are we actually going to be building more showrooms or investing more into dealerships if there is very little new car supply?
No, I mean, far from it. I mean, look, as an industry, we've had an interesting few years with Brexit and RDE and WLTP and no deal Brexit, deal Brexit, pandemic. I mean, it's just like pretty much every year now we have to 10 with challenge. I'm so looking forward to a normal year, whatever one of those looks like. But I think, you know, when we make investments in facilities and acquisitions, we make them for the long term. You know, and we make acquisitions and investments where they make strategic and financial sense for our shareholders. So, you know, whilst you will have these challenges for the short to medium term, we always look long term. So we're not changing any of our plans. And in fact, already this year, in the first half, you know, I mentioned that 57 million of net cash. That's having invested over 17 million in acquisitions and new freehold properties. So, you know, we've acquired, done 2 acquisitions this year already. So no, we keep investing and we keep growing.
Yeah. And one thing that we've seen, particularly in the first half of this year, and we saw it a lot last year as well, is of course this growth in online. Are you starting to see more customers going down the online route, or is there still some hesitancy and people still wanting to go into the showroom?
I think the pandemic kind of forced people to go online because, of course, our operations were shut. And it's interesting. You know, there was a recent YouGov poll which suggested that consumers will still want to see, feel, touch, drive cars, and for that you need physical showroom infrastructure. Likewise, just yesterday there was a report that came out which said only 10% of customers said they will buy online. So I think, you know, for me, it's a blend of the two. I think it'll be interesting to see where that kind of settles. And I think there are other interesting things. I think and we have to give, you know, there's a lot of noise about new entrants out there. I think we've learned from some of these new entrants, and actually, I would say thank you to some of these guys because you know, in some ways, the pandemic has forced us to adapt, and I think we've learned from some of these new entrants as to how we can improve our business. So if I look at some of the things we've done around, you know, online for £99 reservation, you know, 14-day money back guarantee, we would have never done that previously, you know, and that's provide confidence and trust to our customers. You know, what we've done on our online preparation, our presentation, video, nationwide delivery, you know, money back guarantees, but all of that is also really supported by our physical infrastructure, which I think is a key asset for us. And it is interesting that certain new disruptors have now said online, but now they're physical as well. So, so yeah, it's interesting to see how that all plays out. But I'm not somebody who subscribes to the fact that, you know, our showrooms are going to be defunct. Yes, there'll be less franchises in the marketplace. Yes, there'll be less showrooms. But I think the key that we feel passionate about is we've got the right brands and we're in the right markets. And if you've got that, then you're in a good position. And I think our numbers reflect that today.
Absolutely. These online disruptors are here to stay, though, aren't they? And I mean, are you of the view that there could actually be even more of them as the years pass by, as you know, as we move closer to you know, go through the rest of this decade, we're going to be seeing more online only firms?
Yeah, possibly you might see some new entrants. I mean, you know, we wish them all the very best. You know, I mean, Alex Chesterman is no muppet. I mean, you know, he's got a phenomenal CV and a phenomenal track record. So, you know, and what he's done with Kazoo in a very short space of time is pretty impressive, you know. So, you know, we wish those guys all the very best, and competition's good. I mean, if it wasn't for those guys, we probably wouldn't have, you know. And also, I'd say the pandemic dynamics has really forced us to go and really sharpen our game. Likewise, you know, Avril at Cinch is a phenomenal operator. You know, she's a very formidable businesswoman. So, you know, but you look at the sort of financial resources that some of these guys have got, it's significant. And what's appealing for those guys is they're looking at a market of £100 billion and 8 million transactions. Now, we have been trading for 111 years. We're a big dealer group. We've got 116 locations. But our penetration of the used car market, despite trading 111 years and despite that scale, is only 0.6%. So you know what? There's loads to go at. So bring it on. You know, we love competition. So I don't buy the fact that, you know, we should all be scared. Far from it. I love it.
Brilliant. Well, I think that's a perfect way to end, Dash. But congratulations on the results. It's so good to read them, and it's great to see you're doing so much for your employees and all of that. So thank you so much for joining us today, and speak to you very soon.
Thank you, James. And I just want to say thanks for all the good work that you guys are doing at Car Dealer. And I'd also want to say a massive, massive thank you to our teams. I know I said it earlier, but they have absolutely smashed it out of the park. And I think, for me, as I said, those outperformance of the market stats say it isn't tailwind driven. It's what they've done, and big respects and credit to those guys. So thank you to them.
Fantastic. Thank you, Dash. Speak to you very soon. And that's it for today's Car Dealer Live. Speak to you very soon. Bye-bye.